if you're going to start a company, I don't care if it's a software company, a clothing company, a refrigerator business, it doesn't matter. If you don't need to raise money, don't raise money. Raising money doesn't mean you're going to build a successful business. It means that you raised money. We're looking to invest in two types of companies. They're either companies like Jexo, who are launching and building businesses directly in the Atlassian marketplace. The second type of company that we're looking to invest in is a company who, again, is typically, but not exclusively, more in a growth stage. That doesn't mean it's going to be easy. I don't want anyone to be under that illusion, right? Like, being an entrepreneur is a full-time job, for sure.
What is the part of your job that you love the most?
I get a front row seat to entrepreneurship. And that is...
Well, thank you so much for finally being on Misfit Founders.
Oh, my pleasure.
I know we were talking about having you over in Vegas, but it just turns out that I don't have any relationship with Atlassian ecosystem anymore. So you came to my turf. Okay?
Fair enough. Well, I'm happy to be on your home turf. I'm the away team today.
Thank you so much. Well, let's start with a quick introduction.
Yeah.
What is it that you do for Atlassian?
Sure. So right now, I work on the Atlassian Ventures team, and Atlassian Ventures is Atlassian's corporate venture fund. So we are out there in the market investing in second and third-party companies that are in the Atlassian ecosystem to A, invest in them in a very literal sense, but more importantly, to find companies that really provide mutual and symbiotic value to the mutual end customer.
Brilliant. How many companies do you have in the portfolio so far?
A little bit less than 60. So it's a pretty meaningful. Yeah, see, I think when you were there, we were in what? Maybe we had cracked double digits. Right?
I think you might have been in the tens.
Yeah, so we've been pretty
like
active. It's been great. It's been I've been doing this now at Atlassian for 2.25 years. I've been at the company for 9. And we have seen it, I think, since I joined the team, probably triple in size, both in terms of capital deployment, but more in terms of what you and I are talking about, the number of companies in the portfolio as well.
I remember it was such a proud moment for Jexo to be on the Atlassian Ventures investees page alongside Slack and other companies. It's like, yes, Jexo we made it.
Well, if I may say so, you have made it.
Oh, it's super. Okay. Right. So, we're gonna keep the conversation at the kind of like this, talking about investees, companies that go through funding. Maybe we can explain a bit. This is one of the things that I've noticed a lot of early founders don't realize is the investment options that they have.
Yeah.
So maybe we can talk a bit about what a loan note is and
Sure.
how that works. The first thing that I wanted to ask is, and actually I'm going to start very heavy, 60 companies. What is one of the most common challenges that you see these companies going through?
It's a good question. So for us, and for anyone listening or watching, keep in mind, Atlassian Ventures investment thesis is very Atlassian focused. And so where I'm going with that is one of the challenges that we see quite common is figuring out the best way to leverage Atlassian, not necessarily the best way to leverage us as an investor. Once we've invested, the capital gets deployed, we go out and we do what we do. But part of our value proposition compared to an institutional venture investor, for example, is that part of my job, beyond the investment job, is to really help companies navigate Atlassian. And what I like to say, I'm sure I've said this to you before, is help companies get the most value out of the investment, where in that sentence, the word value has nothing to do with capital deploy and has everything to do with sort of the accretive nature of the relationship between Atlassian. And so going back to the core of your question, I'd say one of the most challenging part is each company is looking to get something different out of Atlassian. Some companies are more interested in co-marketing opportunities. Some companies are more interested in how do they grow their businesses on the actual Atlassian marketplace, for example. Other companies are looking for deeper technical integrations that for all intents and purposes basically would require customized work, for example. So I'd say prioritizing that and figuring out which things are not necessarily worth pursuing, but how do we prioritize that and how do we at all times keep the end customer in mind? It's very easy to kind of get quote unquote distracted in your prioritization by understanding, from my perspective, for example, someone like you was my customer. But what we're really trying to do is serve the end customer, the paying customer. So really trying to sort of balance all those different perspectives, I think is one of the more challenging parts. And then to your question, for the founders themselves, I think is understanding that in the moment that they're talking to someone like me, yes, that's the only conversation we're having, but I'm having many of those conversations every day. So it's really about sort of understanding, how do we make sure that we're communicating prioritization clearly? How do we make sure that companies who are building adjacent to Atlassian roadmaps have the visibility they need, for example? So really, I guess, sort of a higher way to say that is making sure that we're bringing founders along for the journey, not just necessarily letting them consume things that otherwise they would find on like an Atlassian blog, as just an example.
And where do you spend more of your time? Is it on the, let's say, the investee relationship, or is it on helping position some of the investees to your customers, like you mentioned? Because it does seem like you're multi-dimensional in a sense.
That's absolutely right. I'd say for me, on any given day, it could be 50-50, but certainly by title, portfolio management lead, like my job is the latter. My job primarily is to help companies, once we have invested in them, really figure out what are they trying to do with Atlassian, how do we get them connected to the right people, how do we deepen that connectivity, and how do I kind of, for lack of a better way to say it, like unleash them into Atlassian and empower them to work with the right people, build the right relationships, so that for all intents and purposes, they can become pretty much autonomous and they don't need someone like me. I become more of someone who becomes more of a thought partner than sort of like a tour guide, for lack of a better way to describe it.
That makes sense. And honestly, you've been doing a brilliant job, even in Vegas at Atlassian teams with running the Atlassian Ventures booth and so on. I remember when that came. It's been going on for 2 years, right?
3 years in a row. That's
3
right.
3 years, okay.
And I think it's been getting better each time, if I might say so.
To clarify what that is, so, and maybe you can mention in your own terms, you're also bringing, Atlassian has this big summit event that's happening in Vegas every single year. There's an expo floor like here with a lot of companies, partners that have certain level of customer base and revenue and so on. But you also created this space for companies that are maybe smaller and they're just getting started and they got funding from you, and you're highlighting them at that expo.
Yeah, it's exactly right. So what we've done, and this year we went bigger than we've ever gone. So Atlassian Ventures gets a booth at the conference, just like you see booths here in front of us, and just like Atlassian has first-party booths at the conference. But the unique part about the Ventures booth is we're not really there taking pipeline meetings. It's not an opportunity for us explicitly, that is. We don't go there trying to meet net new companies. It happens, but that's not the purpose of the booth. The purpose of the booth is we had 6 identical kiosks and we rotated 30 of our portfolio companies through the booth over the course of the 3 or 4 day event. And the reason for that is exactly what you said. A lot of these companies are very early stage, cash flows are tight, and what we want to try to do is provide them a literal opportunity on the showroom floor so that they have an opportunity not only show off their products, but quite frankly, to go meet customers. And so for us, I think the first year we did it, I think maybe we did 2 shifts, like an A shift and a B shift. Last year, I guess we did 3, and this year we did 5. Now that technically meant each shift was a little shorter, but I was really proud that we brought in 30 companies, got them into the floor, and then the nice part is we were able to provide complimentary access to the week for the conference for at least one person from every company. So we're consistently trying to do those types of things, not only to make sure that companies have opportunities to sell to the Atlassian customer base, but also to build community amongst each other in the portfolio. And so we did a happy hour this year, as we've done in years past. I remember the first year, we had like a partitioned off room at the conference center. Then last year it was like a double room, and this year it was like quadruple wide. And it was really nice because as Atlassian Ventures also grows and is around longer and is more durable, there were a lot of Atlassian leaders who came to the happy hour as well. And it was really nice to see that community building, not just between founders in the portfolio and amongst each other, but also really getting to meet and interact with the folks at Atlassian who, frankly, they're consistently trying to meet in general. And so hopefully, we continue that momentum and we can carry it forward. But yeah, the conference, I think, is just, one thing that we were doing to try to activate folks and really enable and empower them to really go and take advantage of the opportunity in front of them.
What is a challenge that you face as you grow your portfolio of investees, and how do you resolve that? Because I suppose, when we were part of the portfolio, right, it was like 10, 15 companies.
Maybe 20,
maybe 20s. Now you have 60, right? I suppose you're facing some growth challenges internally that you have to face to tackle.
In both like very real terms, but also to use like startup friendly language, like one of the challenges we have is scaling ourselves. So we are a very small team within Atlassian. As you know, Atlassian has over 10,000 full-time employees. Atlassian Ventures is a 2-person team. So Yes.
Wait, hold on, no.
Yeah.
So you were two people even when we were part of it? I don't know. It seemed a lot larger to me.
Well, so let me be fair to that point. So we are part of the corp dev department at Atlassian, corporate development that is. And corporate development at Atlassian is a three-legged stool. It's M&A, ventures, and partnerships. So the entire department is bigger than that, but the core ventures team, it's Peter Lenke, who's the head of ventures, and myself. And so one of the challenges that we definitely face is we have to do our own prioritization. And that does not mean figuring out who do we talk to today, who do we not. It's really just really more on the core operation side. Running the fund is not just, okay, you close a deal and let's go talk to people every quarter. As you can attest to, we really try to stay active and be engaged in thought partners. And for companies where we might be the sole investor, like an early stage company launching a business in the Atlassian marketplace, they're looking for us, not just for capital deployment, thought partnership, looking for what you might call quote unquote an unfair advantage as far as understanding sort of, early access to a particular program or something like that. So figuring out where we are spending our own time separate from actual pipeline conversations and then portfolio management on the ops side, I think is one of the biggest challenges we face.
Are you planning to increase that, or are you always going to be two people?
No, I don't think that. I'm not here to, speak on any commitments one way or the other. But I think that if the fund continues to grow, the team will have to grow in some way, shape, or form, or we will have to sort of find some creative quote unquote dotted line solutions where maybe we get a little more active support from teams like the Atlassian marketplace, for example. Could we, for example, leverage, an account manager or something like that from the Atlassian marketplace to work a little more closely and actively with many companies from the ventures portfolio who otherwise may or may not qualify to have someone like that sort of engage with them on a regular basis.
Well, to be fair, my shock at the news that you're two in the team and always been two, when you felt completely different to me, it's probably a positive statement to the great work that you and Peter are doing.
Yeah, thank you. I think, as I mentioned earlier, I've been at Atlassian 9 years, and I'd say one of the biggest skills I've developed is I know how to spin the plates. I really hope it is not coming at sacrificing quality. I really fundamentally believe part of my job is customer service, where founders like yourself are the customer. And I actually think, I know, because we talk about it a lot, it's one of the things we take a lot of pride in Atlassian Ventures, is like providing that high degree of customer service. It doesn't mean we say yes to every question we get, but it does mean that we try to respond in a timely manner, that we don't try to let the balls drop, that we sort of follow up and chase the right people internally so that they are following up on their own commitments and everything that sort of comes with that post-investment.
Well, yeah, and I can testify to that because, look, I've talked publicly about this on the podcast. Being acquired and going through an acquisition process has been probably one of the hardest periods of my entrepreneurship journey. And if there's one thing that made it a lot better and I would say less complex and stressful, was having people around that were very responsive. Atlassian Venture, your team being involved with Jexo as an investee, and having to work and basically communicate with yourself on that due diligence process and to that exit, and the responsiveness that I got from you was really appreciated. So thank you so much for that. When I was going through such a stressful period. 60 odd companies, right? How do you get there? What are some of the traits that you're looking for when you're taking these decisions to invest?
Yeah, great question. So for those who are totally unfamiliar, our investment thesis is really twofold. We're looking to invest in two types of companies. All of them are SaaS companies, so that's not what I mean. We typically invest in companies that look one of two ways. They're either companies like Jexo, who are launching and building businesses directly in the Atlassian marketplace. So for those listening after the fact, or even right here, if you're not familiar, Atlassian has a marketplace a la the Apple App Store, basically extensibility of Atlassian's core products. So those companies are typically, but not exclusively, very early stage companies and pretty small businesses, and you can certainly speak to that very well. The second type of company that we're looking to invest in is a company who, again, is typically, but not exclusively, more in a growth stage, and they are likely less in the marketplace, and if they are, maybe it's just an informational listing or something, but they are integrating with at least one Atlassian products through APIs. And so one way or the other, as I mentioned before, we have a very Atlassian-centric investment thesis, and that's by design. And so the way I guess we got there is, fortunately, Atlassian, I think, is a great platform. We have over 300,000 customers. And I think that the power of the Atlassian brand, and even more so the power of the brand, the actual value that the tool set provides to a very large swath of customers, big and small, I think makes it an attractive platform with which either to build a business on top of the marketplace or to integrate with from an API perspective. And so in that sense, I think we've been very fortunate to do this at a great moment in time where Atlassian is both continuing to grow itself, but also entrepreneurs see the value of integrating with or building on top of the Atlassian platform to tap into what is a very well-established, mature company, and more to the point, a very large customer base.
Well, I've been advising a couple of startup founders and just individuals that want to start a business, and they want a safer entry into the, it's a product landscape. And I kind of recommend going with the marketplace, be it Atlassian if you're on the kind of like work management side of things, or Salesforce, or anything else that has a marketplace, because you have support systems in place to help you launch and grow your business. Be it from a marketing perspective, be it from a financing, funding, like with Atlassian Ventures. So yeah, I think, I don't know, maybe I'm foolish, but I think it's a lot of a smoother ride if you do that.
Yeah, I mean, certainly I agree. And the metaphor I often use when talking to entrepreneurs who aren't as familiar, especially with the marketplace, is we've already put the train tracks down. So you don't have to build out that infrastructure, literal or metaphorical. What you do have to do is build a great product. But if you build that product and you build it on Atlassian's platform, parenthetically, development platform is called Forge, there's a whole bunch of stuff you get quote unquote for free. And it's not just the actual development platform. There are security programs that you can roll into. We have partners who can help you go through SOC 2 compliance, for example. There is a level of trust and validation that comes with being in a marketplace, very similar to how especially on Apple, if you download an app, it's gone through an app security review, for example. So, conceptually, the exact same thing is true, not even conceptually, practically speaking, the same thing is true in a lot of these SaaS marketplaces. And I agree with you. I don't think that it's as simple as like, let's go build a business on 10 marketplaces. No, I think the way you've said it, Biro, where you're talking about what domain do you operate in, what market do you operate in, and then try to go find sort of the market leader in that space and build that business. I will say there are some trade-offs, and you can probably speak to those better than I can. But fundamentally, I agree. I think if you're also looking to sort of de-risk, for lack of sort of my words of what you just said a little bit, I think this is a very viable way to do it. And not just do it, but build a durable, successful business as well. That doesn't mean it's going to be easy. I don't want anyone to be under that illusion, right? Like being an entrepreneur is a full-time job, for sure. But a lot of that infrastructure is there. And for us, I think that is part of maybe tying this answer into the previous one. Part of, I think, how we've gotten to where we are to build out the portfolio has been because that platform is so stable and attractive to build on.
Yeah, for sure. And yes, I completely agree. There are some downsides as well and some limitations of building a product on the marketplace. And Peter here in the audience can testify to that, okay? And as he's now launching a standalone product. But I grew up, I'm 37, I spent 4 years in the Atlassian ecosystem, right? I grew up. I built and sold a business in the Atlassian marketplace, in the Atlassian ecosystem. I do have people that ask me, what is the best path that I could take that you yourself can advise me or mentor me on? And every single time I say, you have a app, you want to build an app for salespeople, build it inside Salesforce or whatever other marketplaces that exist in bigger products for salespeople. And here's what I can advise you to do, and some of the tactics that you can adopt to launch your product as well as to grow it. But yeah, of course, it's not a silver bullet whatsoever. Question: what are some of the deal sizes today? Like in the ballpark of, because you said you're working with potentially companies that aren't, let's call them marketplace organizations. They're standalone, and then you have marketplace organization. What are some of the deals?
Yeah, so we are stage agnostic investors, and for folks who aren't as familiar with the venture lingo, we invest in companies at all stages. We have invested in entrepreneurs who came to us with an idea and a business plan to launch apps in the marketplace.
Yeah.
And so that's what you would call pre-seed in venture terms. And we've also invested in companies that are effectively at a pre-IPO stage as well. So given that we've written 6, 7, and 8-figure checks, I think if you average it out, it probably doesn't tell the whole story. But I think the best way I can explain it, especially for early stage companies, which I know is our sort of primary audience here today in person, on the Atlassian Ventures website, which is atlassian.com/ventures, in very typical Atlassian fashion and a wink and a nod to our open company, no BS corporate value, we have publicly published our convertible note investment vehicle, which you can
Is it public now?
Yep.
It wasn't back then.
It wasn't? Okay,
no.
so maybe that was one of the first things I helped get done. So there's a blog that explains why we've done that, but more to the point, you can actually see the investment contract. And so where I'm going with this to answer your question is those early stage investments are $250,000 in US dollars. And there are some additional terms like some interest payments and a time horizon and things of that nature, but it is a convertible note. And so typically speaking, we don't invest at less than $250,000 in a company, but we also have, up-leveled that depending on the maturity of the company, what have you, and written some larger checks as well. When we get into those growth stage rounds at Atlassian Ventures, because we are a small team, we don't lead those rounds, but we can participate fairly actively. Couple quick admin points, which I think just round out my answer. Regardless of the investment we make, we don't take board seats nor board observer seats on a company. It's just not something that we think, I wouldn't say it's not something that would benefit us. We can't scale that. And so we take that off the table, but we do ask for what founders might know as information or major investor rights to make sure that we can certainly track both the financial and non-financial health of the companies in our portfolio.
Perfect, yeah. And it sounds like it's still the same, like that template, the standard of smaller teams where we did as well a $250,000 loan note through Atlassian Ventures. We got a lot of other benefits, and this is one of the things that, in a sense, comes with it, the support that you get on top of it, and helping the teams to be and these startups to be as effective as possible with their strategy, their product strategy, their marketing strategy, and so on. It's quite important. You do get access to things like, for example, teams, booths, and so on. But for those that, as I mentioned, I meet a lot of founders that don't even know what a loan note is. What is a loan note?
Sure. I'll actually go even further upstream if I can.
Yes, go ahead.
So I've been fortunate enough to do a little guest lecturing at my alma mater at UC Berkeley. And what I tell people on the first class we do it once a year, not every semester, is if you're going to start a company, I don't care if it's a software company, a clothing company, a refrigerator business, it doesn't matter. If you don't need to raise money, don't raise money. Yeah. And I know it might sound really counterintuitive for someone who works and helps run a venture fund to say that, but I really do mean that very sincerely. Raising money doesn't mean you're going to build a successful business. It means that you raised money. And those two things, I think, especially if you're looking from the outside in or just dipping your toe in this world and you read a bunch of TechCrunch headlines or you read a bunch of sexy headlines, like it can be very easy to think like, oh, they raised a bunch of money, they must be doing well. Okay, maybe, but maybe not. Maybe the actual business health is really poor, even if the product health is quite high, for example. Yeah. So I say that as a way to really sort of level set and be intellectually honest about sort of, I think, to your point, not only are there many ways to raise money, you don't necessarily have to do it. Atlassian, very famously, or notoriously, or whatever word you like, was bootstrapped up until, 10 years into the company's history or something like that. And then they ended up taking venture money to really accelerate the scale, not as a necessity. But all that preface aside, so our primary investment vehicle, as you mentioned, for early stage companies is a convertible note. And effectively what that means in very simple terms is it is structured, if you go read the contract, again, it's publicly available on the website at atlassian.com/ventures. It functions as a loan that would convert into equity under certain conditions, hence convertible note. Yeah. So generally speaking, the conditions that would enforce the conversion are an acquisition or potentially subsequent additional raising of capital. There are more nuances to it, but I think for the sake of sort of where we are in this conversation, hopefully that's like at least enough of a curtain pullback where folks can understand that. Another very common investment vehicle, which is one that we don't use as often, but was made very famous and is very popular by Y Combinator, is a SAFE note, which is a standard agreement for equity, SAFE. Generally speaking, very similar. There are some nuanced differences, but we're not necessarily here to dive too deep into the difference between a convertible note and a SAFE note, as much as hopefully that gives a little bit more clarity.
Yeah. And there's also, as you mentioned, in a lot of loan notes, I have one currently for my new business.
Congratulations.
Thank you. Um, it can also be repaid
Yes.
under certain circumstances and based on where you get, and if sometimes it's a time limit.
Yep.
Right? So like if in 6 years
That's
or
right.
10 years you haven't raised another round or sold or anything like that, that might just be repaid. And I must say also, normally the rates for that loan are lower than you would get from a bank.
Yeah, I think
Now it
that's
depends
right.
on the loan note agreement and then so on, but normally they're lower.
Yeah.
So you don't get you don't get loan sharked.
No,
in a sense.
absolutely not. No, I think anyone who goes and looks at our note will find, at least in my opinion, we're not trying to nickel and dime anyone. In fact, we try to make it very middle of the road. Part of the reason we've even publicly published it is to remove the negotiating friction with early stage, often, I will say parenthetically, first-time founders
Yeah.
who, frankly, I mean, when I first got into the venture space, it was a lot for me to learn, right? And I was doing it every day. And so for a founder who's really stepping out and trying to embark on entrepreneurship for the first time, we want to make the actual investment process as simple and, to use a little bit of a cliche, but like down the middle of the fairway, right? Like, we think that the investment terms are competitive, not overly advantageous to us, and certainly not disadvantageous to a founder.
Right, that makes sense. Well, thank you so much for clarifying that, and thank you so
Absolutely.
much for talking about ventures and such. I'm going to close it with one question. What is the part of your job that you love the most?
It's a great question. I get a front row seat to entrepreneurship, and that is very cool. That doesn't mean it's all downhill and momentum. It's not, quite the opposite. There are a lot of challenging moments. There are a lot of hard conversations, but to have the privilege to see that in action every day, and more to the point, when things start going well, it's really incredibly rewarding to see the success. And we do have some successes, not only Jexo. There are companies in their own right who are building very strong ARR and customer growth businesses in the marketplace. And to know that we were some of the seed capital, quite literally, to help get that off the ground, put the dollars and cents aside, the part that I find great is it's the relationships and sort of, really working with folks. And again, to go back to what I said, like when you take that customer service mindset and you see your customers succeed, it's powerful and it's really important. And if I may close out with one other thing, I would just say, especially for anyone who watches this after the fact, Ventures is not the only thing we're doing to support startups. Keep an eye out for a variety of different programs that Atlassian is going to launch that's really designed to help early stage companies, notably in sort of the venture space, really continue to build great businesses.
Awesome, interesting. Yeah, I'm definitely keeping an eye on from afar, from a distance.
Well, tell Nikki to keep a closer eye then, I suppose.
Will do.
Yeah,
Okay,
cool.
and I like that front row seat to entrepreneurship.
Yeah,
I smell Philip business in the future coming.
Well,
like
if you'll be
Philip
my
entering the
investor, then we'll
startup.
see. We'll
Yes,
have to talk. So
we'll definitely.
that sounds good.
Call me when that happens. Okay. Right. Perfect. Thank you so much.
Thanks,
I
man.
have something for you.
Uh-oh.
Because everyone gets this, right? You're not getting away, even though you've been here for just half an hour. You get your own coin for being on Misfit Founders.
This is great. Now, am I the only number 48, or did everyone get a number?
Everyone
48?
gets 48 for
Yeah,
some odd reason. I don't know why.
Cool. Great. Well, that's cool.
No, that's
easier
not-
to print that. No, I know.
That you're the 48.
I like it. I'll get a
conversation.
jersey printed or something like
Awesome.
that. Thank you, man. This was a lot of
Cheers.
fun. I appreciate it.
Appreciate it. Thanks.
Thank you.
Awesome. Thank you. And we're done. Hey, well done.